You've probably heard this before. The faster you trade, the more money you can make. It sounds logical. More trades should mean more opportunities, right? But that idea quietly destroys more trading accounts than almost anything else. Because the real difference between amateurs and professionals isn't speed, intelligence, or even strategy. It's how they use time and how they control themselves inside that time. Hi, I'm Rick Graham. Most traders start on lower time frames like the 5-minute chart. And honestly, it makes sense. Everything is happening fast. Price is moving constantly. There's always something to look at, something to analyze, something to potentially trade. It feels productive. It feels like you're in the game. But what feels like progress is often just noise, dressed up as opportunity. When you sit in front of a 5-minute chart, you're not just watching price, you're being pulled into a constant stream of decisions. Should I enter here? Is this breaking out? Should I close early? Is this reversing? Every small movement asks you a question, and your brain tries to answer every single one. The problem is, most of those questions don't matter, but your brain doesn't know that. It reacts anyway. Here's what's really happening under the surface. Your brain is wired to notice movement. That's a survival instinct. Thousands of years ago, if something moved quickly, it could be a threat. So your brain learned to react fast. That worked in nature. But in trading, it works against you, because now every little price movement feels important. A small drop feels like danger. A quick move up feels like opportunity. And before you even realize it, you're not calmly analyzing anymore, you're reacting. And reacting leads to mistakes. This is where most traders get stuck. They think their problem is strategy. They think they need better indicators, better entries, better signals. But the real issue is the environment they're trading in. The 5-minute chart forces your brain into a constant state of alert. It keeps you slightly stressed, slightly rushed, always on, and over time, that drains your ability to make good decisions. There's actually a name for this decision fatigue. Your brain only has a limited amount of high-quality decisions it can make in a day. On lower time frames, you burn through that limit quickly. So by the time a genuinely good setup appears, you're already tired, already emotional, already less disciplined. Now compare that to what happens on the 4-hour chart. At first, it feels almost too slow. There aren't constant signals. There aren't endless setups. In fact, most of the time, nothing is happening. And that can feel uncomfortable. You might even feel like you're missing out, like you should be doing more. But that's exactly the point. When you move to the 4-hour chart, the entire experience of trading changes. The noise starts to disappear. All those tiny, meaningless movements get compressed. What's left is much clearer. You start to see real structure, levels that have actually been respected over time. Trends that aren't just random spikes, but sustained movements. And most importantly, you make fewer decisions. Instead of constantly reacting, you're observing. Instead of chasing, you're waiting. Instead of guessing, you're letting the market show its hand first. That shift alone changes everything. Now you might be thinking, if it's that simple, why doesn't everyone just switch? Because the hardest part isn't technical. Trading the 4-hour chart forces you to deal with something most people avoid: silence. There are long periods where nothing happens, no trades, no action, no stimulation, and that can feel uncomfortable. It can feel like you're being left behind. But what feels like missing out is often just you breaking an addiction to constant activity. Because a lot of traders aren't addicted to profits. They're addicted to action. Let me paint a picture you'll probably recognize. It's the middle of the day. You're watching the 5-minute chart closely. Price comes down to a support level. It looks clean. It looks strong. You start thinking, this is it. You feel confident, so you enter the trade. Maybe you even size a bit larger because it feels right. And then, within minutes, price drops. Your stop gets hit. You take a loss. Now your emotions kick in. You want to recover it. So you look for the next setup, and the next, and the next. And suddenly, what started as one trade turns into a spiral. Now imagine that same situation from a different perspective. A trader looking at the 4-hour chart sees that same level. But to them, it's not enough. One touch of support doesn't mean much. They're waiting to see if price actually holds. They're watching how candles close. They're looking for confirmation, not just reaction. So while the 5-minute trader jumps in, the 4-hour trader does nothing. And because they do nothing, they avoid the loss completely. That's the difference. It's not about being smarter. It's about being more selective. This brings up something important that most traders overlook. There's a big difference between something looking good and something being proven. On lower time frames, it's easy to confuse the two. Everything looks like a setup. Everything looks like it could work. But on higher time frames, the market has to prove itself. It has to hold levels over time. It has to show consistency. And that naturally filters out a lot of bad trades. Several years ago, I worked with a man at the radio station who also enjoyed trading on the radio. His name was Harley Davidson. Harley was deep into lower time frame trading. He was active every day, taking multiple trades, always watching the stock charts along with the music charts. Some weeks he did well, but his losses were unpredictable and heavy. His account would grow, then drop, then recover, then drop again. There was no stability. When he switched to the 4-hour chart, it didn't feel great at first. He was trading less. He felt less involved. And interestingly, his win rate even went down a bit, but something else changed. His winners became much larger. His losses became smaller and more controlled. And over time, his account stopped swinging wildly. It started growing steadily because he wasn't chasing trades anymore. He was choosing them carefully. This is where identity comes in. The time frame you trade shapes how you think. If you're constantly on the 5-minute chart, you naturally become reactive. You start looking for constant opportunities. You feel the need to always be doing something. But when you commit to the 4-hour chart, your mindset shifts. You become more patient, more selective, more focused on quality over quantity. And that's not just a strategy change. It's a behavior change. Professional traders don't rely on impulse. They follow a process. Before entering a trade, they run through simple checks. Is this a level that actually matters? Has price shown that it respects this level? Is the risk controlled? Is the potential reward worth the wait? If something doesn't line up, they don't force it. They just wait. And that waiting isn't hesitation. It's discipline. One of the hardest truths to accept in trading is this. Doing nothing is often the right decision. It doesn't feel productive. It doesn't feel exciting, but it protects your capital. And protecting your capital is what allows you to stay in the game long enough to grow. Because consistency doesn't come from how often you trade. It comes from how well you execute when you do trade. Another thing that changes on higher time frames is how you handle trades after you enter them. On lower time frames, everything feels urgent. Small pullbacks feel like threats. You're tempted to close early, adjust stops, or interfere with the trade. But on the 4-hour chart, movements are slower and more meaningful. Pullbacks look normal. The trade has space to develop. And because of that, you're more likely to stay in winning trades longer. That's a big reason why professional traders often have larger average wins. They don't just aim to be right. They aim to let their wins fully play out. There's also something else that doesn't get talked about enough. Drawdowns. Every trader experiences losing streaks. That's part of the game. But how you experience those losses depends a lot on your time frame. On the 5-minute chart, losses come fast, and that speed can trigger emotional reactions. You feel pressure to fix it immediately. So you trade more, take more risks, and often make things worse. On the 4-hour chart, losses unfold more slowly. You have time to think, time to step back, time to adjust. That space helps you stay in control instead of spiraling. At the end of the day, most traders don't fail because they lack knowledge. They fail because they don't change how they interact with the market. They want better results, but they keep the same habits. They want consistency, but avoid patience. They want profits, but also want constant excitement. And those things don't go together. Trading, when done properly, is not very exciting. It's calm. It's repetitive. Sometimes it's even boring. But that boredom is a good sign. It means you're not forcing things. It means you're waiting for real opportunities. And that's what allows accounts to grow over time. So the real question isn't which chart is better. It's which version of yourself you want to become. Because the 5-minute chart will keep you busy. It will give you action, stimulation, and constant engagement. But the 4-hour chart will teach you patience. It will force discipline. And over time, it will give you something much more valuable than excitement. Consistency. The traders who are consistently profitable have already made this shift. They're not chasing every move. They're waiting for the right ones. And once you start seeing the market this way, it becomes very hard to go back. If this helped you, hit the like button, subscribe to the channel, and drop a comment about the one trading mistake you're working on fixing. Are you ready to take your trading to the next level? Click the link in the description now and get started today. Watch the next video on the screen. It'll show you exactly how to time your entries once you've locked in the higher time frame direction. See you next time.